What if I told you that one decision, a single, quiet, almost forgettable decision, could have turned $1,000 into over 60 million? Not a startup, not a lucky stock pick, not inheritance. One decision, made while the world was looking the other way. In 2011, Bitcoin crossed $1 for the first time. If you had bought just $1,000 worth that day, you would be sitting on more than $60 million today. If you had bought $10,000 worth, you would never have to work again for the rest of your life and the lives of your children. So here's the question that's going to follow you for the next 12 minutes. Why didn't you? The year is 2008. The global financial system is collapsing. Lehman Brothers is gone. Banks that had existed for over a century are begging governments to save them. Millions of ordinary people are losing their homes, their savings, their retirements. Not because of anything they did wrong, but because the people they trusted with their money had gambled with it and lost. The entire world is watching the financial system crack open, and somewhere in the noise, buried in an email list that almost nobody reads, a 9-page document appears. Its author is anonymous. No photo, no real name, just a pseudonym, Satoshi Nakamoto. The document is called Bitcoin, a peer-to-peer electronic cash system. Almost nobody reads it. The few who do mostly dismiss it, and Satoshi Nakamoto disappears back into the internet, leaving behind something the world had never seen before. A form of money that no government controlled, no bank issued, no authority could freeze. Code running on computers around the world. A currency for the internet age. But here's the thing. At the moment of its birth, Bitcoin was worth nothing. Literally nothing. For over a year, no one even agreed on what a single Bitcoin should cost. Then, in May 2010, a man named Laszlo Hanyecz made history. He paid 10,000 Bitcoin for 2 pizzas. Those 2 pizzas cost him, in today's money, over $600 million. That is either the most expensive meal in human history or the most important transaction ever made, depending on when you decided to pay attention. By 2011, Bitcoin had crossed $1. It was the first time you could look at it and think, this is real money. This has a price. A small, strange, fiercely devoted community had formed around it. Cryptographers, libertarians, programmers, people who believed the financial system was broken and wanted something new. Most of them weren't rich. Most of them weren't financial experts. They were just early. And here's where the story gets uncomfortable. Because at this point, Bitcoin at $1, the investment case was actually visible. If you squinted hard enough, you could see it. Digital gold, finite supply, no central authority, an asset that no government could inflate away. The argument was there. So why didn't millions of people buy it? Because buying wasn't the hard part. By June 2011, Bitcoin had done something extraordinary. In just a few months, it had exploded from $1 to $32. 3,000% in months. The internet was buzzing. Articles were being written. People were calling it a revolution. And then, it collapsed. Within weeks, Bitcoin fell from $32 all the way back to $2. A 94% crash. If you had put $10,000 in at the peak, you had $600 left. Now ask yourself honestly, would you have held? Most people didn't. They saw their money evaporate. They told themselves they'd been foolish. They took whatever was left and walked away. And in walking away, they missed everything that came next. This is the first lesson of Bitcoin. And it's not about Bitcoin at all. The first crash didn't destroy Bitcoin. It destroyed belief. And belief is the only thing that matters when the world hasn't caught up yet. Let's talk about what it actually felt like to hold Bitcoin in 2012. The price was down, way down. The mainstream media had declared it dead. Forums were full of people saying they'd made a terrible mistake. The headlines were brutal. Bitcoin, the currency of the future? More like the currency of criminals. Why Bitcoin will fail. The digital tulip mania. And these weren't fringe publications. These were respected economists, Nobel Prize winners, the smartest financial minds in the world. They were wrong. But in the moment, sitting there watching your investment bleed, you had no way of knowing that. You had no guarantee, no certainty, no confirmation from the future that it would work out. You had only belief.
And belief, without evidence, feels indistinguishable from delusion. This is the part of the Bitcoin story that nobody talks about. We talk about the returns. We don't talk about the 1,000 quiet moments when rational people chose to stop believing. When they looked at their screen and thought, "This was a mistake. This is over. Get out while you still can." Most of them got out. And then it happened again. By 2013, Bitcoin had risen to over $1,000. The biggest cryptocurrency exchange in the world was a platform called Mt. Gox. At its peak, it handled over 70% of all Bitcoin transactions on Earth. And then, in early 2014, it was gone. Hacked. Hundreds of thousands of Bitcoin, billions of dollars worth, stolen or missing. The largest exchange in the world had simply collapsed. If you were holding Bitcoin on Mt. Gox, your money was gone. And even if you weren't, the news was devastating. How do you trust something after its biggest marketplace just vanished? How do you tell your friends and family you're still holding after a disaster like that? Bitcoin crashed again, 80%, then more. The obituaries poured in. Bitcoin is dead. Again. For almost 3 full years after the Mt. Gox collapse, Bitcoin went sideways, slowly bleeding, quietly forgotten by the mainstream world. And now, the real question. Not just, would you have held after the first crash? Would you have held for 3 years of silence? 3 years of nothing. 3 years of doubt. 3 years of telling people you still believed in something they'd stopped laughing at because they'd simply moved on. Almost nobody did. Almost nobody. Sarah sells in 2015. She's lost 60% of her investment. She tells herself she got lucky to get out when she did. She puts the money in an index fund. She's fine. She's rational. She made a reasonable decision. But in 2017, Bitcoin hits $20,000, and she watches from the outside. James doesn't sell, not because he's smarter than Sarah, not because he had better information. He holds because he decided, quietly, stubbornly, that he would either lose everything or see it through. By 2017, his $1,000 investment is worth $20,000. By 2021, it's worth $60,000 per Bitcoin. Same starting point, same information, same market, same fear. One decision at the moment of maximum doubt. That's all that separated them. And here's what makes this so haunting. In timeline A, Sarah made the sensible choice. Every piece of information she had pointed toward selling. The rational mind, trained by every financial education system on Earth, said, cut your losses and move on. The rational mind was catastrophically wrong. Here is the real secret of Bitcoin, and it's not about Bitcoin. The people who became wealthy from Bitcoin were not exceptional investors. They were not geniuses. They were not lucky in the way we usually mean luck. They were exceptional at one specific, deeply uncomfortable skill: surviving uncertainty. They had learned, either through wisdom or stubbornness, to act before the outcome was clear, to hold a position that everyone around them said was insane, to stay when every instinct said run. That's it. That's the whole thing. The money was never in the prediction. The money was in the endurance. Now here's why this matters even if you've never owned a single Satoshi. Because Bitcoin is not a special case. Go back to 1997. Apple Computer is nearly bankrupt. Steve Jobs has just returned to a company the world has written off. The stock is under $2. If you'd bought $10,000 of Apple that year, you'd have over $8 million today. Would you have held through the dot-com crash? Through the years when people said Apple was a toy maker for designers? Go back to 1997. Amazon is an online bookstore. Jeff Bezos is considered slightly eccentric for leaving a perfectly good Wall Street job to sell books on the internet. If you'd bought $10,000 of Amazon at its IPO, you'd have over $20 million today. Would you have held through the years when Amazon lost money consistently? When analysts said it would never turn a profit? When serious investors called it Amazon.toast? Go back to 2012. Tesla is making a car that catches fire. Elon Musk is considered a dreamer at best. If you'd bought $10,000 of Tesla then, you'd have over $4 million today. The pattern is always the same. The greatest investment opportunity of any era arrives looking like a terrible idea. It arrives before the institutions validate it, before the media celebrates it, before the consensus forms. It arrives in the uncomfortable window between possible failure and extraordinary success. And most people, almost everyone, waits for the uncertainty to clear before they act. By which point, the window has closed. Think about what it would have taken to hold Bitcoin through everything. Through the first 90% crash, through the silence of 2012, through Mt. Gox, through governments banning it, through China banning it, again and again, through 111 different times journalists declared it dead and buried. Every single one of those moments was a test, not of intelligence, not of financial knowledge, of psychological endurance, the ability to hold a conviction in the face of overwhelming doubt. And this is why most people didn't get rich from Bitcoin, not because they didn't know about it. Surveys show that the majority of people in developed countries had heard of Bitcoin by 2017. They knew. They just couldn't bear the uncertainty long enough to stay. Here's what I want you to carry with you after this video ends. Every year, in every market, in every industry, there are opportunities that look like mistakes. There are investments, businesses, technologies, right now, today, that the smartest people in the room are dismissing. And somewhere among those dismissed ideas is the Apple of the next decade, the Amazon, the Bitcoin. The question is never, can you find it? The question is, can you hold it? Can you stay committed to something unproven while the world tells you that you're wrong? Can you make a decision in the fog, before the outcome is clear, and live inside that uncertainty long enough for the world to catch up? Because here's the thing about hindsight. It makes every great investment look obvious. Of course you should have bought Apple in 1997. Of course you should have held Amazon through the dot-com crash. Of course Bitcoin at $1 was a gift. Of course. But they weren't obvious then. They were terrifying then. You are standing at forks in the road right now. Not metaphorically, literally. There are decisions in front of you today, investments, businesses, ideas, bets on the future, that will look obvious in 10 years. And most people will miss them. Not because they're unintelligent, not because they lack access, Not because the opportunity isn't visible, but because they're waiting for certainty before they act. And certainty only appears after the outcome is known. The people who became rich from Bitcoin weren't rewarded because they could see the future. They were rewarded because they were willing to act while the future was still uncertain. Because that's where extraordinary outcomes live. Not in certainty, not in consensus, but in the uncomfortable space between possible failure and extraordinary success. The fork is always in front of you. The only question is, which path you choose. If stories like this change the way you think about money, investing, business, and the hidden decisions that shape our world, subscribe to Wealth Fork. Every week, we explore the decisions that built empires, the moments where ordinary people stood at extraordinary crossroads, the alternate timelines that show us who we might have been and who we might still become.